What's up, guys? This is how I started investing from zero at 22. So I did a poll today on Instagram because I wasn't sure what I wanted to post, but we have a clear winner. I'll show it up here. But I'll do a little bit of everything because I also had a comment. Someone went into my DMs and asked me. His name was Tony. He asked me basically like, what do you do when you're starting from scratch? And so if I had to start from zero at 22, here's exactly what I would do to start building wealth step by step. All right, so today I'll show you how I would start from budgeting, investing, saving, and how I'd use my paychecks the smart way. So first, we're going to build the foundation. Most people skip right into investing because they see Instagram, they see all this stuff, and they're like, invest. But you need a base. You need to be stable. People have that, all that stuff. So step one is build an emergency fund. Start with like $500, $1,000, or 3 to 9 months of living expenses, and set it aside. Don't touch it. It's not part of your savings. It's like separate. You know what I mean? For me, my personal, I have 2K. Don't touch it. But if like my car breaks down, or if an emergency, like my tire blows up, my phone dies, life doesn't care if you're investing. And the last thing you want to do is take out your investments, maybe even at a loss, and use it towards something that you could have had paid for with an emergency fund. So step two is pay yourself first. So let's say you get a check of $1,000. Here's how I would break it down. Emergency fund / savings, it's going to be 30%. That's $300. Stored away. Investing into your Roth or just whatever type of investing is going to be 40%, $400. And then spending or fund money is going to be 20%, $200. And then if you have any future goals, extra debt, or big purchases, that's going to be 10%, so $100. And that's going to be the full $1,000. So remember, 30% builds a safety net, 40 goes towards your future, and then 20% goes to whatever. And you got to enjoy life. You can't just count every penny. The last 10% is going to be for your goals, travel, if there's something coming up, or your personal growth. So if you have $0 right now, if you had nothing at all, this is what I would do. I would start to save until I have $1,000. Get a job, do some side stuff, sell some random things you have around the house, whatever you can do. Then I would open a Roth IRA, and I would start investing with something small, maybe 25, 50 a week. And remember, small money today, it means big money later because of compound interest. As time goes up, your investments are going to go up with value and stuff, as long as you invest the right way. And you got to stay consistent, and consistency always beats fast returns. Remember, I'm gonna always say it in like these videos, but time in the market beats timing the market. A lot of people, they think that they can just wait until there's a Black Friday type of discount, but no, it doesn't work that way. So what would I put that money in? I would just do like a simple ETF list, so you guys, the beginners, feel confident. There's no reason for you guys to be trying to nitpick which stocks you guys think are going to go off and go crazy, like Nvidia, like Apple, like Google, Tesla, Meta, or the next AI stock, or in other industry. So for me, the ETFs that I would look into is SCHD for dividends plus stability, VU or SPY. But VU has a better expense ratio, which basically means every time you buy it, you're spending less for the fee. And the SPY or VU is for broad long-term growth, and encapsulates the 500 best companies. And then you have your tech or your growth is going to be SHG, QQQM, you know, if you want a little bit more risk, a little bit more potential up scale. And you can mix and match based on your style. You don't have to do all three. You can do one, you can do two. It's ultimately up to you. It can be beginner friendly. Play around with the percent to, you know, decrease or increase your risk. And, you know, like for example, SHD, it's going to be stable. VU is going to track whatever the market does, it's going to do that. And SHG is going to do something like this, where if this is the market, it's going to go a little bit above it. You know what I mean? So it's up to you. When you the best thing is, if you're starting from nothing, the biggest asset you have is time. So don't worry about timing it or throwing all the money you have. Just be consistent. And I'll show you some brokers that I like. I was watching a quick video and this guy was doing a little tier list and I kind of like it. So I'm gonna flash it up here real quick. But I'm gonna do a little walkthrough at the end of this video on Fidelity and Robinhood, just doing a little like quick tour guide. So you guys, if you guys decide to go with those two, so you guys are not lost. All right. So if you're starting from zero, you're not behind, you're early actually, drop a comment with your situation and I'll try to help you out. Subscribe if you're building wealth with me. We're doing this together. All right. Peace. All right, guys. So first we're going to go into Fidelity. We're going to log in real quick. Alright guys, so I just logged into Fidelity. This is my little sister's account. So here we have a Roth IRA. We have the market. What's next? Thingy bob. And then let's go to the next tab. We have investing. So that's what she's in right now. We have the watch list. And we have the markets, as you can see. Pretty cool. Not crazy. We have planning, if it wants to load. And then I guess we have a little discover tab. Alright, cool. So that's basically what... Oh, and let me just show you, if you hit transact, you can buy stuff. Basically what you would do is once you log in, you make an account. You would, if you just want to do your investing account, you would go here on the top. If you want to do a Roth, you would go here in the Roth. You would add funds. You would link your bank. And then after that, you will send money. And then you can buy whatever you want. And then, let me just pretend real quick that I'm going to buy one of these. So we hit trade. As you can see, you can either buy reoccurring, buy normally, and obviously if I had money, you could do how much you want, you know, and then boom, go from there. Alright, so we're back here in Robinhood. Similar thing, it's a little bit more simplified. I like it. I like the layout. So, my goodness. Alright, so here we have the main page. We have options. If you're into trading, we have crypto stocks that I'm in currently, cash, blah, 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 all this stuff. Watch list, we have crypto. Cool, we have the Roth IRA. And then Robinhood is a little bit more sleeker. They have joint for joint accounts, spending for, if you want like a debit card. They have strategies for Robinhood Gold members. If you want to read that, you can. And that's basically it. Oh, let me just show you how to buy something real quick. So you would go, pretend you want to buy some Bitcoin, right? Down here, buy. Make sure you send it to what you want. Look, right here on the top right. You can reoccur, stop, so market order, you know, limit order. Then you would buy. So you saw how I was in BTC. Look, you can select the frequency, all that. It's kind of crazy. You could do $1. Just go crazy from there. And that's pretty much it, guys. So just start open an account. All you gotta do is start, and sooner or later you'll be up, you know.